Good morning, everyone, and welcome to the Real Estate Outlook 2022 that's hosted by Fine and Country. I think I'd like to introduce Mr. Odunayo Ojo of UPDC to speak at least to some of his own predictions or what he sees as trends coming from 2021 into 2022. A very interesting point that was raised by Mrs. Okonjo lastly was around investing in REITs, and I think that's an area that UPDC has played fantastically well in. So I wonder if you could speak to that as well, in addition to some of the trends that you would spotlight.
All right, good morning, everyone. I want to thank the organizers of this event for inviting me to speak, and it's a pleasure to be here. I would like to just share a few thoughts to what we see as trends and what are the key drivers that we see in the marketplace. All right, so just to give some kind of a refresher on what happened in 2021, a few of these points have already been discussed by Ikenna. We saw a return of COVID. Everyone thought that 2021 was going to be the end of COVID, but then came Delta, then came Omicron. The rest, as they say, is history. But it's good news that in 2022, we are beginning to see a different attitude toward COVID. It's now being termed an endemic rather than a pandemic. So that's good news for the real estate industry and other industries as well. 2021, we saw business disruptions, especially in travel and hospitality industries. These industries are interrelated, especially when we look at the luxury space. The luxury customers are well traveled, and when people could not travel, it had an impact in how people interacted with some of these products. But again, 2022, we hope to see a much less impact on businesses. We also saw the advent of working from home continue from 2020 into 2021, and that has a very profound impact on the commercial spaces, as we saw many large consumers of office space release some spaces, even in the Nigerian market, because people were working from home or were looking at hybrid working conditions. We saw inflation continue to rise across the world, and in Nigeria in particular, which affected the cost of construction, obviously, and eroded purchasing power locally for people who earn most of their income in Naira. We also saw exchange rate volatility, with the Naira devaluing during the period, also making it more difficult for people who wanted to invest in the dollar side of the industry from doing so. Good news was that toward the end of the year, toward the fourth quarter of the year, we started seeing economic recovery and the industry began to grow. And we saw a resilience in the luxury segment of the market. All through the period, the luxury segment, especially residential luxury segment, seemed to have held its own. And we saw, like has been discussed this morning, projects continue. Many high-end projects in Koi continued to do well, and in Victoria Island, other luxury markets as well. So 2022, what are the outlook factors that we are seeing? This is the year before an election year, so there's the election fever. Different people have different reactions toward the election cycles. Generally speaking, it's a period where we see a lot of transactions close, again, because there's a lot of economic activities that happen usually toward the end of administration cycles. We also see a situation where international investors adopt the wait and see, as I mentioned today. But generally, across board, in this particular cycle, our outlook is that we will continue to see an increase in deals being closed and in transactions being done. We anticipate economic growth this year off the back of the increase in crude oil prices and general trend toward economic recovery and growth, especially for the Nigerian economy. So that is also going to make its way into the real estate market, and we're going to see a lot more activities done in real estate this year. The luxury residential segment will continue to grow. We are already seeing a lot of appetite for very well designed, very well built real estate in the residential luxury segment. As has been mentioned already today, there's going to be a gravitation toward credible developers, people who have a track record, off the back of some of the disasters that have happened in the market. We anticipate that the well-built, well-designed projects promoted by credible developers will command a premium and will do very well in this period. For the office segment, we will continue to see a supply-demand imbalance, given that there's a lot of supply that's coming on stream in 2022 and 2023, which would, in our view, further worsen the already oversupply situation we have in the office spaces in our key markets. However, we see this being a situation where the customer will have choice. A lot of customers will become very discerning, and the players in the high-end commercial space would have to be very creative in order to be able to attract the kind of AAA rated customers that they expect, or in order to keep their high quality customers. One of the trends we are seeing is the advent of co-workspaces, as many companies now begin to embrace the hybrid working situations where people work from home at some points in time and some people come into the office gradually. There's going to be a lot more demand for co-workspaces to share costs and to share facilities. So we are seeing a lot of demand, a lot of requests for that asset class in the commercial area. We're also seeing a lot more activities being done in the REIT space. So as been mentioned, UPDC is one of the foremost players in the REIT space. UPDC has UPDC REIT that is listed on the Nigerian Stock Exchange and continues to be an exit option for a lot of commercial real estate projects. And it's also going to be another opportunity for investors to raise funds. And we anticipate that we'll begin to see new REITs being listed, and we'll begin to see REITs actually acquiring more properties in the market, especially investable grade properties that are tenanted. So this is an interesting space that I believe both institutional investors and even high net worth individuals will begin to play. We are seeing a lot of international investors taking particular interest in the REIT product because it's very liquid. It's easy to convert. You know, when you need to exit, you can just sell it like you're selling your shares or your stock in any company. Also, the REITs have very high liquidity because by regulation, REITs need to distribute approximately 90% of their net income to investors, unit holders. So for institutional investors, it's a very liquid asset. Maybe during the course of this session today, we can touch a little bit more about that asset class. We continue to see discerning customers effectively going for more quality than quantity, and location has become very, very key, especially in the luxury residential space. We've seen what has happened on Odilon Road in the last couple of years with many high-end projects coming along that road. We are seeing projects going on in Banana Island and highbrow areas. The address factor is very, very important. We're going to begin to see the advent of customers generally insisting on certain addresses as they make their choices. Also, there's a changing customer preference profile that we're seeing. People are able to trade more space for higher quality, and we are seeing high-end construction delivery driving sales in the luxury market sector. And lastly, we're also seeing the advent of technology playing a huge part in how customers and developers interact. We're seeing a lot more virtual tours happening. Again, thanks to COVID, people cannot move around as much as they used to. So many developers are having to reach their customers in non-traditional ways using technology. We're seeing the advent of social media taking a huge step towards bridging that information gap. A lot of developers now do interviews and shows and videos on platforms such as Instagram, and so on. So we're seeing technology playing a part on the marketing and the customer relations side. We're also seeing technology being played in terms of construction and in terms of commercial interactions with, some investors actually even talking about Bitcoin and how blockchain can be applied to real estate. So these are trends that we're seeing in the market, and during the course of the presentation today, I'll be happy to shed a little bit more light on these. Thank you very much.
Fantastic. Thank you so much, Mr. Ojo. And I like the point you made about quality over quantity. And I think it's a trend that definitely will continue as, investors and customers in this area become more enlightened. I wonder if you've given thought to a dual listing of sorts, and having perhaps these REITs being represented on foreign exchanges where the diasporans can invest in, hopefully, and at the same time also get the benefit of protecting the value of their currencies. Because what you then have the benefit of is being able to then maybe switch over to, say, a London listing and sell and get your proceeds in GBP as opposed to Naira at the time. What do you say to that? What are your thoughts? I'd just like to.
All right. Thank you for the question. I think the state of our REIT market is still very, very infantile. There are not too many products, and the products that are even available are completely oversubscribed. The pension funds have over 13 trillion naira, and there aren't too many products for them to invest in. The REIT is one of the few products that PFAs can invest in, and with 13 trillion naira and counting, you can imagine the kind of demand that REITs have. And PFAs, at least for now, are Naira investors. And there are so many regulations around how investments can be made. But you make a very good point around what can happen in the future. With the new entrance of international investors looking into the REIT market, we will begin to see a push towards liberalization of listings, and we'll begin to see opportunities for dual listings right from the creation of the REITs. Because once the REIT is created and the units are sold, they are in the hands of private investors, but from the beginning, if they are structured as such and you have underlying assets either in Nigeria or over a region, and then those assets can be listed internationally, I think that will even attract more capital into this market, and we'll see a lot more activity going on. One of the key issues with the REIT market now also is the dearth of investable assets. Most of the good assets are held by corporates who have them as their headquarters, and a lot of them are not willing to sell, or maybe they haven't seen a price that they are unable to refuse. But as this becomes a much more mainstream product in our real estate market, we'll see a lot more creativity and flexibility going forward.
Great. Fantastic. So I think it's a trend we can also expect. Would you be able to give some time into that, say 2 years, 5 years down the line?
Well, I can tell you that before the end of this year, we'll see a heightened activity in the REIT market. There are a few players who are currently promoting some REIT privately, and we'll begin to see them coming on stream publicly. In terms of dual listings, I think this is something that we considered maybe over the next 24 months. Most of the REITs that are being discussed right now are mainly for the Nigerian market, but as soon as those ones are closed, we begin to see a lot more flexibility going forward. So I'll say 24 to 36 months, we begin to see this trend catch on.
Regarding the last pronouncement made by Lagos State, shifting from yearly rent to monthly rent by all Lagosians, how will this shift affect investors' decisions and existing luxury apartments together with those in the pipeline? I know we had a list of luxury apartments that are coming up in 2022. With the yearly move to monthly rent, how would it affect investors, but also maybe consider the consumers as well?
All right, thank you very much. So generally across the world, rent edicts don't work, especially in the free market economy. Rent edicts don't work, and you can read the case studies all across the world. The Lagos State has tried rent edicts before in the 90s, designating certain thresholds of rent in certain areas. Nobody's hearing about it anymore, even though there was an edict that was enacted. I believe it was 96 or 97 or something like that. Now, what do I think? I think this does not really apply to the markets that we're talking about. In the luxury end, rent restrictions and rent edicts don't typically play. These are people who have the means. These are people who are happy to go into commercial negotiations and close the deals. Also, because the good supply is so limited, we are going to see a situation where even if there's a regulation, what just happens is that there's a separate commercial arrangement that people have for such properties. In certain areas of town, maybe in the lower end of the market, there is going to be a debate until people just realize that it's so frustrating getting a house from a landlord that's willing to take monthly rents and all the administrative challenges that go along with it. I believe that the implications for the high end is very limited. Thanks.
Thank you so much, Mr. Ojo, for that well-answered question. I learned a lot just listening in, and I know that there are more questions. Unfortunately, we'd have to move to the next panel. There's a question asking about what REITs are, and it's really just a pool of funds to invest in real estate in sizable amounts using a trust vehicle that's owned by a company. It also allows you to accommodate diversified real estate and manage risk for investors. So follow Mr. Ojo. Mr. Ojo, are you on LinkedIn, Instagram,
yes,
TikTok, or which one?
UPDC is on LinkedIn. I am on LinkedIn. So Odwayo Ojo. UPDC is on Instagram. I am on Instagram. So UPDC PLC is the handle. Odwayo Ojo or Odun Ojo is my handle. Thank you. All right. So, I mean, I'd like to thank everyone for sharing their insights. I think it's been a beautiful exchange of ideas. I believe that it's a good time to get involved in real estate. Real estate, as we all know, is an enduring asset class, and it's an asset class that is a proven hedge against all the economic challenges that we're facing. Hedge against inflation, it's a hedge against devaluation, but we have to be discerning as consumers of real estate. There's no point putting your hard-earned resources into an asset that would not retain value over a long time. And so even though everyone keeps talking about price, what we should be talking about really is value. And that is where I think we can make the difference. Value is always constant. Prices go up, prices go down, but value remains. And I would like all of us to just tap into that mindset. I believe the current changes in the regulatory and in the economic environment would make it even more important to ensure that we only key into schemes that offer us value. And that's where we come in. I mean, this is what we do. Please feel free to contact us or anyone on this call for that matter, for advice and for direction. Thank you.
Thank you for that philosophical view as well. Science that you just shared with us for real estate. One question that came to mind for me while Mrs. O was talking about the 3 C's on collaboration, creativity, and credibility. And then also when Mr. Ojo spoke to value, and then we looked at the regulations and all of that, the watchword for me at that point was sustainability. And we're seeing a lot of rise in ESG concerns now, where a lot more investors are pushing funds to projects that are sustainable. And that is also attracting a new segment of the market, which are the millennials. And what we've also seen is an increase in share value for companies that actively have ESG as part of their risk frameworks, and also infuse that in the products that they bring to market. So from the standpoint of all of the skyscrapers, I know in Africa we don't emit so much carbon, but we're right now at the peak in nature where a lot of action is now being taken to cure what had been done by other countries that had emitted all of this carbon, and we can't be left out, unfortunately. So as we build all the skyscrapers, how are we thinking about the emission of carbon? What are some of those creative ideas as well that can be brought into real estate, and also attract the right investment, but also start to capture more value in that space? I'd like to hear a few thoughts on that, perhaps from any of the speakers on the panel.
I think where we need to go is to institutionalize sustainability in this market. In other markets, you can't get away from it. By regulation, the institutions have been crafted in a way such that you have to infuse sustainability in your design and in your development. Otherwise, you will not be able to do real estate. I think that's the next step we need to go. Investors, I think, are constrained by funders, and they are constrained by access to capital. They are constrained by customers, deciding customers that have been said. But now we need to get to the point of regulation also constraining us, because this is the future.